everybody, and welcome back to the Dash Trader Newsroom. Earnings season is here again. This year, will we sell in May and go away, or will this year be difficult? Well, it certainly has been difficult already, but will this year be different? Those three dangerous words when it comes to trading in the markets. My name is Michael DeGioia, Director of Educational Services here at Dash Trader, and I'm joined by my co-host, Jill Malandrino. Jill, how are you?
Good. It has been quite the week.
Absolutely. And it's been quite the month as we start. It's May 1st. Earnings season is here again. We got some huge earnings coming out here today after the bell. I think Amazon, we have Apple. The U.S. economy came out and has contracted by 0.3%. Will this contraction be transitory? That dirty word comes up again. U.S. Chamber of Commerce secretary has asked for certain further exemptions to avoid a recession, further exemptions from the Trump trade tariffs. What's the skinny? What's actually going on here as we round off the end of April?
This certainly has been they usually say December to remember. I don't know what you would call for April, but the first 100 days has come to an end, and now we're focusing on the next 100 days, which of course is the execution around strategies or potential strategies that the administration has decided to put forth as its policy. Will the contraction be transitory? We knew the comments that the Fed made regarding transitory, which will be a mark on Powell's career, and for better or for worse. So I think the word itself is really what makes it more impactful than anything else. There are so many moving parts, Mike, and I think that's what the challenge is for when you're looking at tariffs. If one thing goes this way, the balance goes this way, right? And we'll get into that in a moment when we talk about the U.S. dollar and what it means for imports, exports, consumers, and so forth. So that's what the challenge is. Every time we think that there's some sort of light at the end of the tunnel, or we think we know where the administration may be going, there's another lever that's pulled. So it's hard to say if it's transitory. My thought is no. I think that there will be, prolonged volatility. It certainly won't be like the markets that we've seen over the past 2 years, where the S&P was up 25% plus. That's an anomaly. That's not the norm. I think if there is a recession, and this is pretty much so in line with economists and strategies that have joined my show, it will be relatively short-lived, and it won't be such an extreme recession. But there's another side to this as well. We spoke about it on an econ panel that we did yesterday. You and I have spoken about this many times, where we could have been guessing what the strategy might have been like 2 years down the road, like we did. December 2018 was 2 years after Trump got the presidency. I feel like we came in this time, he ripped the Band-Aid off. So it's not like we're worrying in the market, trying to figure out when it could happen. Now it's trying to figure out what the outcome is, right? Yeah. So that's one way to look at it. I think the market is at the point where it wants a resolution, and it feels like it's closer than it was, let's call it, in the beginning of April. It just feels as if the composure has changed. We've had a number of policymakers on the show. In fact, I had 2 on this afternoon, and you're starting to hear more. Let's talk about the policy, not the politics of what's going on. They're really looking to get a framework around it. I had actually I can't even talk straight today. It's so crazy. It's been I had yesterday on climate tech, investment and policy, always doing something on digital assets, always doing something in privacy and cybersecurity, what AI framework is going to look like. This afternoon we did what global innovation and framework is going to look like moving forward. That was with Congressman Nunn, that's Iowa's 3rd district, as well as Chairman McHenry. He was head of the House Financial Committee for a number of years. So these are people who have really good insight into how policy is formed and insight into the administration. And we're just hearing more of, let's think about the policy and remove ourselves from the talking points and the performative piece of it, that's kind of encouraging. That's a different kind of shift than what we've heard.
Yeah, it's a very, very good point. I mean, it has been a difficult month to say the least. I mean, now that the month has passed, what really has changed? I mean, what has changed besides tariffs on some consumer products from China? Can you maybe, after, obviously speaking with all these individuals, are there now 10% tariffs on all goods coming into the United States? It's kind of difficult for the non-professional person to keep track of it all. So really, what is the breakdown as to what has happened from the tariffs? Is that, obviously there is a trade war going on with China. How has it affected earnings season specifically? Like we have Apple earnings coming out today and Amazon earnings coming out today. You know, what is the actual impact? Because there's been so many exemptions made. It seems like, the average person on the street has no idea what actually transpired.
Well, it's interesting. I was talking to a colleague of mine on the desk yesterday at Nasdaq, and she's getting married this winter. And she got her dress in December. Her mother-in-law just ordered hers this week because it takes time to, when you go to a bridal shop, you have to make appointments. You just don't walk in and you get it. And her dress went up, I believe it was 8 to 10% because of the fabric. A lot of
Right.
fabrics come from India, China, that area of the world. When I moved to my house in 2021, it took me nearly 2 years to get all of my furniture because the fabrics come in through India. So between all the supply chain um, um, challenges that we had, it was held up. So those are
Yep.
anecdotal
I
things where,
remember that actually. I was here for that.
yep, yep. So yeah, I think we moved in April 2021. I got the last of my furniture just before Easter 2023. Anyway, so the data is one thing, but when you start to hear from consumers that, oh, 10% on an expensive dress, you're looking at, that could easily be a couple $100 more. Anecdotally, I order, Amazon's at my house 10 times a day, but on my, monthly orders I have coming in, some things they're up 10, 15%. I noticed even toilet paper was up $5 for the month.
Hmm.
So,
Yep.
but I think, bigger picture than just anecdotal stuff as a consumer, I think part of the challenge is American businesses are canceling orders from China. They're postponing expansion plans, and they're really hunkering down to see what trade policy. Um, I wouldn't call it surprises. I would call it more um, shifts in negotiation. I think using words like surprises is a little bit subjective in my mind. Of course, there's going to be shifts as negotiations are made. There is unpredictability in terms of taxes on imports, and these higher costs and this uncertainty. It could impact the economy. It almost feels like COVID, when it first happened 5 years ago, do we rush and buy everything now in case prices go up? Um, so the data says one thing, data is always being um, revised. But I think the fact that businesses are holding off on certain investments that they would have made, that's a bit concerning because the silver lining has been that R&D investment in 2025 that hasn't been pulled back. And
Hmm.
that was kind of the thing. But you know what though, if you look at the performance of the market and its forward-looking mechanism, perhaps it's pricing in, okay, like the worst of it is over. And
Hmm.
we'll see what kind of resolution we'll get. And he's saying, we'll see. But it seems as if the percentages are coming a little bit back in line.
Hmm.
Um, So, we'll see.
From a,
But
from a purely technical perspective, we were in bear market territory for, approximately 5 days, 4 days, where we were down more than 20%. And then the market, sprung back. And now we're kind of at correction territory. As of today, with today's gap up in the market, we're kind of at this 10% point. Markets have been, incredibly resilient, but the thing that's been keeping the market up, and you and I have been speaking about this almost ad nauseum for a couple of years, is the consumer. and the consumer is starting to show weakness with this 10% more coming out of the consumer's pocket, over time. Now we have seen, some bright spots. You and I have both talked a lot about gold, and we saw that gold on this has broken out to record new highs on the U.S. dollar weakness. I've been a gold bull for a long time on just whoever was elected. I figured that they were going to be spending, and that would have a positive effect on gold. Incidentally, the U.S. dollar has gotten significantly weaker since the beginning of 2025. Now, what is the effect of the U.S. dollar weakness on U.S. exports, or is it just because it's the U.S. as the dollar is no longer as trusted as it once was? Is this a more of a geopolitical weakness of the U.S. dollar rather than a repositioning for trade?
Well, we have first of all, let's take a step back and understand what a weakening dollar means. And it applies, there's a number of circumstances, and not all of them are necessarily negative. So a weakening dollar means that imports become more expensive. So you have to think about imports are becoming more expensive, plus you have tariffs, but it also means that exports are more attractive to consumers in other countries outside of the US.
Mhm.
We have run a trade deficit with other nations, meaning that they are a net importer, and a nation which imports more than exports would usually favor a stronger currency. So a
Mhm.
weakening dollar could be, advantageous to, countries outside of the U.S. But when and more frequently compared to the euro, and I think it was last summer, Mike, where we were essentially on par with the euro, which was a
Yeah.
great deal for
Yeah.
Americans going to visit in Europe. So that's one way to look at it. When the euro is trading higher than the dollar, then it makes it more
Mhm.
expensive for us, to go there and import. So,
Yep.
um, and I also think we have to look at it, more through the lens of a sustained period of weakness or strength, as opposed to 2 or 3 days of price fluctuation,
Mhm.
which really has been the case. I mean, Mike, you and I have been doing this, at least 30 years, wait, 98, so just about 30 years for me. But I can't recall another time where, and April's a great, example of this. I mean, look at March 7th, as an example, that Monday when we just round tripped, right?
Mhm.
I can't recall another time, whether it's .com, GFC, 9/11, and so forth, where the moves have been so exaggerated, and not just the equity market.
Yep.
So that's where it's challenging, because it's not like we're in, a prolonged pendulum swing. It's happening in a matter of sessions. And I think that's where the nervousness lies.
Yeah, I started September 1998, just in time for the five
Yep.
Asian tigers to collapse and the market to finally have a big pullback in the tech bubble. So, you and I have been at this for close to 30
Yep.
years, and a lot of things didn't exist at that time. For instance, one of them was cryptocurrencies, which
Hmm.
have been holding up exceedingly well. There's about as many cryptocurrency early adapters as there were early adapters to the internet in 1998 when you and I got started. So
Hmm.
it's a very similar case there. But Bitcoin and Ethereum, Bitcoin specifically, has bounced back really well. And it's honing in on that 100,000 level again. What are your thoughts on cryptocurrencies? I mean, really, that has been something that the Trump administration has been fairly positive and bullish on, or very favorable to. So certainly, crypto has had a fair bit of volatility. I know I picked up quite a bit on that pullback, but what are your thoughts overall on crypto going into the rest of the year?
So what's interesting is I tend to look at crypto and digital assets more through the infrastructure and regulatory and policy end. It's
Hmm.
great to see new products get introduced and so forth, but the real catalyst, in order for this to advance at scale, is the regulatory framework that the U.S. introduces. As I mentioned before, I had Patrick McHenry on. He's the vice chair of Ondo Finance, formerly the chairman of the House Financial Services Committee, who was, an early adopter, and set forth, a number of, regulation to advance digital assets and crypto. We were joined by Zach Nunn, who's the U.S. rep for Iowa's 3rd Congressional District, and we were discussing the future of digital assets, crypto regulation policy, and not even that, but the importance of national security and financial innovation. So they are quite positive on the advancement of a regulatory framework because it is also being looked through the lens of national security and with the accessibility that it creates through the digital asset infrastructure. That also is a larger story around the economy as well, for people having access to these types of services that might not have had us before. So they
Yep.
are they were highly constructive about the time frame of when they see this being adopted and passed. And Mike, believe it or not, this is something that gets bipartisan support. And
Mm-hmm.
on my show, like I said, we talk about the policy, not the
Mm-hmm.
politics. And that's
Yep.
a big difference. And this is one of those areas you would think digital assets, it would be a little bit more polarized, but there
But
is
it's not. Yeah.
significant bipartisan support.
Yeah, actually, it was even, I think it was Fink from, the CEO, what's his name? I forget his first name. Fink from BlackRock was saying that
Mhm.
Bitcoin is potentially a runner-up um, for um, for a possible reserve currency. Anyway, I don't know if we actually, I think we might have lost Jill there. Anyway, there she is. I think she's back. I think we lost you there for a
No, no,
moment,
no, I'm here.
Jill.
I'm here. Sorry,
All
thought I was
right,
on.
cool. Anyway, we're pretty much done anyhow. Thank you so much, Jill. I might be seeing you next week, and we'll be on again very soon. Either way,
All right,
thank you
cool.
so much for
Sounds
your
good.
input. All
All
right,
right,
have a
see you,
great
Mike.
weekend. See you soon. All right, we're gonna keep moving right along into our market analysis section. I'm going to just um, see if I can escape this and seamlessly transition to my dash trader. There it is. We're catching the close. We might have to hear the closing bell. Needless to say, here is the QQQ, and we're going to take a look at just how the Nasdaq has performed. So here we have the QQQ, which basically we've had a big gap up, kind of into the correction territory level. We have a lot of earnings out tonight, so let's take a look at Apple, AAPL. Apple made a really strong comeback after selling off down to 167.50. Very far off its 262 levels. We also have Amazon coming out tonight. Amazon certainly getting hit pretty hard on this recent sell-off in the market. Not much of an earnings run up either. So, it's going to be very interesting to see what Amazon and Apple both have huge China exposure. However, Apple did get a number of exemptions. I think Amazon is really more in the hot seat than Apple. NVDA, NVIDIA, also very big China exposure, not really bouncing back. Apple bouncing back better, showing relative strength to Apple and Amazon. MSFT really gapping up massively today on earnings. Obviously, it has it's kind of been a gap fade, but the gap up was kind of tremendous. So we had a nice move to the upside on Microsoft. Microsoft has kind of been down in the dumps for some time. So we have Netflix, NFLX. Netflix really continuing. I mean, it's almost amazingly broke out to new highs. It did have a strong earnings report as well. Netflix overall is still in an uptrend and really has not even slowed down for a minute. So Netflix really showing incredible resilience. Let's take a look at GLD, which is the gold ETF. We had a pretty decent pullback in gold, which is expected since gold really almost had a parabolic move to the upside recently. This is still an uptrending asset class. GBTC, which is cryptocurrency and Bitcoin, Not quite back up to the highs, but at least it's about 50% retracement from the levels that it was at previously. So GBTC certainly holding up as well. Um, let's see what else we got going on. Let's take a look at the SPY. SPY out of bear market territory, and not quite into, well, kind of right on the border of bear market and correction territory. The IWM, which as it's supposed to, signaled the sell off first. I think that this is one that the Russell is clearly still in bear market territory. The Russell, which is the small cap index, small caps and smaller companies really getting negatively affected by all the volatility and uncertainty in the month of April. So on that note, I'm just gonna bring this back. Stay up to date with all things DAS. I mean, just as a trader, I would say that expect continued volatility and certainly be cautious. But trading is the place to be. This has been a fantastic trading market in the month of April. But stay up to date with all things DAS by signing up to our monthly newsletter. Simply fill out the form at the bottom of our webpage. Stay tuned because we'll be having another number one best trader competition coming in October. Subscribe to our YouTube channel so that you stay up to date with all things DAS on Dash Trader TV and the DAS Newsroom reminders. Follow us on social media, LinkedIn, Twitter, Facebook, and Instagram. Thank you so much. Trade well, everybody, and hopefully see you in a week.